Good morning, everyone. Sam here. Hope everyone is doing very well. You should be able to see the screen and sound should be coming through fine. Let's get started here. Okay. Good morning, everyone. Sam here. Hope everyone is doing very well. All right, there we go. Sorry, had a little challenge, but I think we're good to go now. You should be able to hear and see the screen. Yeah, James, I'm with you there, but yeah, we absolutely did, and I figured there'd be some questions or comments about why we're here and what we're doing and moving on and all that, and I completely get it. Very, very mixed emotions and sad period for me for sure. If there was any way I could have remained at OTA, I absolutely would have. And people have no idea what's been going on for quite a while with the whole situation. And we can't get into that right now. But with news I got about 3 weeks ago, the circumstances required me to move in a different direction. So, again, probably, for a couple of reasons, now's not the time to address that, but it should be addressed, and it will. And but believe me, I am. Words can't describe what's been going on in my head and for a while, and especially now. So, but my focus and passion is always, what Jasmine and I do together and for you. And so we thought this is a way to keep this going for right now. And as long as we stick to that, survive, and because the fire inside us continues to burn stronger than the fire around us. Yeah, I can tell you, I am. It's all about being fearless in pursuit of truth, integrity, and everything else that sets your soul on fire. And that's exactly what's going on here. And as you can tell with my stuttering, this is not a scripted message. It's the truth. And there's a lot more that people don't know. So I am 1,000% of just keep pushing for that and towards that truth. And rest assured, as most of you know in life, that will all over time come out and everything will end up as it should. All right. And let's keep going. All right. So I want to start out with the screenshot that you see here, just to help you, understand, and the core of what we do here, the core of the message, and it's really all about supply and demand, right? How the markets really work. So let me just tell you though how this session will go. Okay. So I want to go over what you see on the screen right now. I'll try to do it fairly quickly, but I want to make sure you understand. Next, we will go over our little market prep that Jasmine usually covers. And then I will turn it over to Jasmine, and she'll walk you through the markets, and you'll see all about that plan. All right. Okay, so if you look at the screen, again, the premise here is that the movement of price in any and all markets is a function of an ongoing supply and demand relationship, right? Low risk, high reward, and high probability opportunity is present when that simple and straightforward equation is out of balance. Does that make sense? Were we all on the same page with that? If so, then we have to back up and just understand the two questions that matter. Where will price turn and where will it go? Any market, any time frame, day trading, swing trading, long-term position trading, and so on. Okay. And if you're in pursuit of answering those questions and a razor-sharp focus on those two questions, we realize that unfilled orders or supply and demand cause prices to turn in a market, and filled orders, okay, which is a lack of supply and demand, allow for price movement. In other words, if there's a lack of supply and demand, there's less to keep prices from moving, right? The bigger the imbalance, the more likely the turn in price. So if you look at the stick figures on the left, these represent supply, demand, and relative balance. Now notice I don't call that equilibrium. Why not? Because it's never equal. Even if price is not moving up or down, it's not an equal equation behind the scenes. It's always an unbalanced equation that takes a certain period of time, to play out, right? And you probably see that when you're trading. I saw that firsthand on a trading floor many years ago. That's where this whole strategy comes from. And I am just the messenger, and Jasmine are just, we're the messengers here for you. So take a look at the screen. The stick figures, make sure you understand, represent supply and demand. But when we look at the chart over on the right, those two charts, what do the candles represent, or lines or bars or ticks, whatever type of chart you have? What does the chart represent? Right? The chart represents filled orders, right? When a trade happens, we get a print on the screen. So the chart represents filled orders. The stick figures represent supply and demand, or unfilled orders. So if you think about it, not only just does the chart not show us what we need to see, it shows us the opposite picture of what we need to see. I see someone saying BW's in the house. I assume that's Brandon Wendell. How you doing, Brandon? Anyway, let's keep going. So again, not only do the charts not show us what we need to see, but they show us the opposite picture of what we need to see. We need to look at a price chart that shows us filled orders and figure out where the significant unfilled orders are, that significant supply and demand. Big orders from banks and financial institutions, the smart money, like I saw firsthand and dealt with on a trading floor. All right, that's what causes prices to turn and move. Okay, so how do we do that? Well, the picture again is opposite. So what I grabbed here was, this is a screenshot from one of Jasmine's sessions. This is a supply zone that probably you folks were in this session. Some of you folks were in this session, and there was a supply zone. This is from a little ways back. Now look at the supply zone there. In fact, right here where I'm pointing on the chart, see the two little circled areas? And if you're thinking to yourself, wow, these are so small, I can hardly see them. Why are they so small? Why is there such little trading in those two circled areas that make up that one supply zone on the chart in the middle of the screen here? Right? Why is there such little trading there? It's because supply and demand is so out of balance. The more out of balance supply and demand is, right, the less actual trading activity you're going to get. Right? Now, if we look at the picture in the middle, I'm looking at the live trade setup here. If we look at the gray shaded area on the chart, look at all of the trading activity in that area. Tons and tons of trading activity, especially when you compare it to the actual supply zone, right? Tons of trading activity. What does that picture represent? That picture represents filled orders, or a lack of significant supply and demand, right? Okay. So if Unfilled orders cause prices to turn. And we see unfilled orders supply, on a price chart looks like that, right? Very few trades that actually took place. Now I say that up here. Let me back up a little bit. This supply zone up here, I say that supply exceeds demand here, but how can we be so sure? And of course, there's not 100% certainty with any of this, right? Any type of trading and investing, anytime we put money out there in any kind of investment, at the end of the day, it's a guess. So we want to make the most educated guess we can based on the most objective information inside an objective strategy, right? A set of rules. So, but how can I say that with such kind of certainty, even though it's not 100% certainty? Because if supply and demand at the supply zone was in relative balance or equal, wouldn't price just keep trading sideways here? It would, but it couldn't. Why? Because this supply zone is up somewhere near these red guys up here, right? Guys, girls, figures. We need to come up with a name for these little people. Okay. Competition to sell. There's so much competition to sell in the supply zone, you hardly get any trading price drops. Now, the fact that price can trade up and down in this gray shaded box so much, so long, so much volume, all that suggests that there's a lack of significant supply and demand. If there was a big supply and demand imbalance in this gray shaded area, you wouldn't get all this trading. Wouldn't happen, right? You get very little trading and price would shoot away, but you did. That suggests price is somewhere in the middle here. Okay. Now, tomorrow, we're going to take this whole concept a step further, but wanted to make sure you had kind of the basics of this today. So, again, the supply zone, our red stick figures here, right? Unfilled orders cause prices to turn. The gray shaded area with all of the trading activity that we see represents a lack of supply and demand or relative balance, right? That facilitates or helps prices move, makes it easy for prices to move. Yeah, I saw someone say the snowplow effect. Absolutely. I don't know if people in Florida will understand that. No, I'm just kidding. Okay. Over on the right, the results. So how that opportunity played out in the market. Price shot up to the supply zone. Okay, so up here, right, to put the final pieces on this, we had people buying here and people selling. But again, if you're kind of new to this, ask yourself, who is buying, who is selling? Okay. Now, we're never going to know their name or their address or anything like that. But when we focus on the actions, is it the actions of a smart buyer and seller of anything or not? Okay. So, exactly. The buyers here, when price came back to this area, are buying after a rally in price and into a price level where the chart already suggested supply greatly exceeds demand up here. And I wanted to put these, start to put these two pictures together to really help you think the markets the right way. That's the key in this in the beginning. Once you can think the markets the right way, the rules make sense, and the rules are not in conflict with your thoughts. And that's one of the biggest reasons people say, "Well, I understand the rules, but I executing them is a challenge." If I only took all the trades that I put out there, I would have done so well, right? People struggle with themselves is because it's got to start with how you think the markets, right? Thoughts control our actions. We all know that. Okay, so we're going to take this concept 2 steps deeper tomorrow, but I think that's enough for right now, and we definitely want to get to Jasmine quick here, but let's go over our little prep. So, a couple things to talk about here. Fed fund futures are pricing in negative rates over the next 12 months. Powell is suggesting that the COVID impacts will last deep into 2021, which suggests more stimulus. States and countries and counties are slowly starting to open up again. There's vaccines that are on the horizon. All this equates to fairly good news for the stock market, right? I think we would all agree with that. Okay, I think we'd all agree with that. And the stock market has rallied, no question about it. But remember what gets prices to go, what causes prices to go higher are more buyers, right? So with all this news out there, all this news just building up that's good for stock markets, and markets are rallying, prices have come up to, if we start with this 30-minute chart, well, the question I was going to ask is, if things are that great, why aren't prices well above this 60-minute supply zone yet? And I'm not saying things aren't great. Remember, the reality of what's going on in the world and how prices move in markets are very inversely related. We're going to chat about that tomorrow. Okay. But so make no mistake about it, the markets are up. And they're up nicely off one of our supply zones from last week, if you're in those sessions. But what they are reaching, so the 60-minute supply zone up here, 29.40, that was last Monday. And some of you may have captured that. But inside this drop, we're hitting two levels that are inside of this area. And what do we call this area up here? This area that I'm circling, what does that represent? Okay. Hint, what does all this trading activity represent? Okay. All right, I think you know the answer. But yes. So, tomorrow the focus is going to be structure and location, okay, and a little bit more. There's another thing we're going to add to that. But so while these two supply zones that I'm sharing with you here on the 30-minute chart, these are both lower than this 29.40 supply. So they're inside this. Can they work? Sure, they can work, but just remember they're a little bit lower probability, especially this lower one. They're inside this, okay? I think prices are kind of sitting in this upper one at the moment. But remember, both of these levels are sitting inside this. A move deeper into the 60-minute S&P zone above last Monday's high, that's would put us into some fresh territory. And even this level is just a pivot high. The significant levels are just a little bit higher. All right. So when we look at all the good news out there for the stock market, okay, and remember, markets anticipate all that news. They move so far in front of the actual, news and all that, right? Like those March lows, make sense? Okay. Now, another thing I wanted to share with you here, look at the Nikkei and DAX. These are daily charts over here on the right. So now these are weaker markets, obviously much weaker than the NASDAQ. The NASDAQ is the strongest, right? S&P, Dow, a little bit behind that. Russell kind of behind that. And of course, these two are the weaker ones. So no question about that. However, they have some significant supply zones on a large, significant time frame like the daily chart here, okay? So keep that in mind. The likelihood of all these markets moving to new all-time highs in the near future is not likely with this overhead supply above and the fact that we're now a ways away from some demand. Does that make sense? And, for those of you that have been with me, the way that we played, the March lows, this is the same concept with news and price. So we'll keep an eye out, and we want to make sure that we focus on the fresh quality supply demand levels. One more thing I want to share with you, and then I'll turn it over to Jasmine here. So you're going to see different things on the charts. You're going to see yellow boxes. You're going to see yellow circles, white circles, blue circles. And there's actually two new ones we've added to this. And so you're going to see an updated guide tomorrow. We're going to add an updated guide to this. And the purpose of this is for you to understand the difference between the supply and demand zones that you see in a chart. Because here's the thing, structure-wise, you could have 5 zones that look absolutely identical, but one or two of those could be much higher probability than the others, right? You have to, location, how fresh it is, all that stuff is the key. Does that make sense? Okay. So I want to make sure that you thoroughly understand that. So this will, hopefully help guide you to those high probability levels. This guide will, and then it'll also help you understand. That was the whole goal. All right, it's great to be with you, and I know these are challenging and confusing circumstances, but anyway, I explained that kind of in the beginning. Probably shouldn't go back and repeat all that. I think this session is being recorded. So with that, let me turn it over to Jasmine, who is absolutely amazing, and great to be back connected with her, doing sessions and doing sessions for you, most importantly.
Thanks, everyone. Hi. Thanks, Sam, for that heartfelt speech at the beginning. I'm sure everyone is so happy to have you back here with us, because if it wasn't for you, none of us would be here. So, all right, let's get into the charts. And you should be seeing, I have the DAX up first. I figure we'll start a little bit with Europe. Sam did give you a little bit of a rundown of what has been going on. Just waiting for a little, hopefully it comes up a little bit. Okay, here we go. All right, so the DAX has been the weaker market in general. It gave you the daily zones of them, so you know that they are still above. For right now, let's go take a look what has been happening in general. So with all the good news overnight, we are having a continued rally up in price, where you can see the next fresh 60-minute is really coming in at the 11,062 to the 11,148. With the daily, of course, still higher, which is still a possibility that we move there. You are forming some new demands you can see close by, even right down below at the current moment, right on this rally back up. And also some new demand also at the 10,340 to the 10,292. And the reason why I keep a watch on this market, because since it is the weaker market, you can see if it has strength, it can give us even more strength in the US markets. There is another level it's going to be approaching. That's this would consider to be one that I would consider, if when we start to do the new session guide, more of that brown color. And I do have a, okay, so you can see that this is inside, this supply level is inside of, coming off of this move already. So that's coming in at the 10,933 to the 10,984, right? So that is going to be hitting it. So for today, I believe with all the good news and all, it's definitely a market continuing to rally. I was looking for some supply zones possibly by the open that can, since we are going to have some open gaps down below in most of these markets. But for right now, these look like they're getting up there a little bit quicker than at the open, because we still got another hour to go before the open. So anyway, let's go take a look at the S&P. All right, so like Sam was talking about before, these levels, so these are the ones that you can see we've already went through the very highs of it, because you can see the ones in brown because of where this is located. If we take a look at the daily, right? If we take a look at the daily, we have hidden back down into some daily demand and now coming back up here. So you can see where these levels are located. They're located right inside of here. So really not any kind of fresh areas in terms of where we are in the bigger picture. What we will have though is higher up. The fresh level is really coming in closer to the 32.6 32.16, 32.67. On the 60-minute, we will have an area right in between that is coming in. And this gray, if you see this gray here, that means that those are levels that have been hit and are still holding prices. So this is the demand side that hit, and now this is also the supply side that hit. So you can see anything that was inside of here was actually inside of those two ranges. So if we're looking at the fresh area now, that's still coming up above, with these two levels on top of each other, coming in at 30.002 to 30.34 to 30.81. Now down below, we are going to have a gap that I believe is going to be coming in right around a little bit more data. Where is it? All right, let's go and take a look. We're going to be having a gap right around this. So it's coming in at 28.46. So what you will see is that at this gap area where, so we are quite a bit higher than that right now, but back down at the gap, we have tested down below a few times. So I would go a little bit below the gap if it were to come back closer to the 28.38, 28.30. The gap's going to be right about at that 28.46.50. We could take a look at that on the SPY. So you can see the SPY will be above the 30-minute now. Has the gap going to be coming in at 286.25. And then the above zone is going to be at the 316 to 308. So that is going to be the first area that's going to test, that's going to come in line with that S&P ES at the 3,000 mark. Let's go to the NASDAQ. So inside of the NASDAQ, we have the same scenario in which where we have the inside levels coming up higher. We are going to get into a couple of areas. One is going to be the gap that is going to hit first, and then these two levels on top of each other. That's going to come in at 95.52 to 95.64, I believe. And then let me open this up a little bit more. 95.84 and then 96.05 to 96.44 with those two levels on top of each other. One thing I am also going to be watching out for, you know, the NASDAQ, of course, has always been the strongest market with technology behind it, and not a big impact with it actually helps, you know, with everybody staying home and all. It actually helps this this overall market. But one thing I am going to be watching out for the time to come is really the semiconductors, which can have an impact on the NASDAQ in general, because if it is going to have any sort of sell-off, that is going to be the market. And what I'm going to be watching in particular is this area right here. Let me just see if I find it. All right, so I did group them out a little bit, not necessarily in this week or whatever, but it is going to be on my watch list. So you can see the PHLX, the semiconductors, looking at a few of them, Micron, Qualcomm, Applied Materials, Broadcom. This is I believe, a Taiwanese semiconductor. With all that's going on with the Huawei and the accusations, and with the China president going to the WHO and all that, these markets are being impacted, and so those will be ones on watch, because those will be the ones that, if it's going to get affected, be affected the most. So just keep that in mind. Apple and the Nikkei also, if anything should happen during this time with it. So there is a lot of tension going on at the current moment, but right now we are rallying overall on stimulus, continued stimulus, expectations. But these markets are ones to watch going forward for a little bit, coming in the next week or two or so. All right, let's go back. Okay, so you can see where the gaps are going to be coming in with the NASDAQ too as well. So the one thing I did see was, it looked like the gap to me was tested once before. Didn't quite test very deeply into it. So I was still looking at it again. That's coming in at 90.94.75 to 90.69. And then the lower areas where I see it not being tested yet, which is coming in at 90.31 to 90.13. Inside of the Qs. So those areas on the Qs are going to be, the fresh area is going to be coming in at the 220.50 to the 220. Right now, you are going to have a gap that's going to be coming in at the 223.28 area. And then, of course, with that upper zone, the 240 zones coming in closer to the 229 to the 235 inside of the Qs. Small caps, you can see once it starts to get moving, it really starts to pick up some steam. And now we are getting almost back into where our previous area that we dropped from. So we already tested this area twice, so I would be careful on this one. The upper one, that would actually still be one of those brown areas. Well, this would be actually one of those brown areas, but that area you could see on the supply side, we have not tested back into the 1355, 1363. Just realize, look at where we are with this, right up into this overall area. So the fresh zone is really coming in closer to the 1429. Up to the 1459. Then on the demand side, can see also we have a new demand that just formed, but we also have it down below at the 1245 to the 1234. Okay, so before we go into the other markets, since there is a little bit question of the different colors, I'm going to go to the yen just purely because I believe that may be able to explain a lot more with the color codes. So you can see the yen here. I thought that this would be a good example of the color codes. So let's start, actually, before we do that. All right, let's start with this picture right here. So Sam's going to update the session guide for you. For those of you that's been with us, knows that we've had a couple of different colors in terms of the fresh levels that haven't been hit, retested levels, and the overnight levels. Added 2 more color codes right now. And you can see right from this picture, at least the only one that's missing is kind of the overnight, but because this is the Forex market, there's really no overnight. So you can see where the pressure levels above and below current price, those are still going to remain in yellow. The gray levels inside are the ones that have hit and we have moved back and forth in. So you can see that this level up on top on the supply side, as well as this level down below on the demand side. A lot of times these levels can work again, depending on, the situation, but you can see a lot of times they're ranging and they can work again. Now, moving down into some new colors. So you can see a little bit of a difference here. Again, this is going to be the gray one where prices, we had this level and this we have hit it and we have continued to fall. These you can see there actually should be brown, where the browns are going to be the levels that are inside of the range. So this way you have a little bit of a clue of when you're looking at the levels, if they're inside the range, outside of the range. So you can see that this area, these two areas have been inside the range. This demand level as well, inside of the overall range, does look like you formed two new little supply levels too, which they would also be in brown because the range is getting a little bit tighter, but would also be in brown too as well. So that's a little bit of the picture of the different color codes as we continue to move on in these sessions. I picked brown because I figure, yellow, so brown's a little bit more muted than yellow. So that kind of, I figure that kind of makes some sense. But anyway, let's go back into, one thing I did want to mention with the Russell is this whole area and that is coming back to is coming off of this whole area, right? So if we take a look at that spot that we're taking a look at where the RTY is coming back to right now, that is right inside of this, okay? So just so you know, that is why it's considered more of a brown spot, because this is not a fresh overall zone. So I just figure I'd pull up the IWM to show you because that is the levels that we had that prices started to fall, and now it's created that where we're coming back to. So not a fresh area in terms of that. With the YM, you could see still quite a bit of ways from its upper 240. It will have to get through some of the 60-minute zones to get there. So let's go take a look at that. At the current moment, it is hitting the previous 5-minute zone that we've been at for quite some time. On the 60, this area actually should also be more of a brown color. As we get back to the 24,576, 24,718. And then the upper zones would really be where you come in. So circle is overnight, and this is where you get into the fresher areas. So that's coming in at this 20, let me open this up a little bit. Oh, we can't. 20, I believe 26, a little bit above 26,000 to 26,255 to 26,629. You can see it on the 60-minute chart, right above your little gap here. I believe on the demand side, we just barely missed this zone, which is the 23,205 to 23,142 on top of a smaller time frame zone that's coming in at 22,840 to 22,757. All right, now let's go take a look at the bonds. So you can see what's happened with the bonds. We have hit down into a little bit of demand, formed a little bit of supply up on top. So it is, I believe, suggesting at the current moment with the inverse markets that we do have some close supply up above. And now we're just waiting for the inverse markets to kind of take out these closer demands, and then you would have some supply. So that's still suggesting a little bit more stock market move higher. So we'll have to keep a watch on this as we hit into some of these closer demands. If we still stay in here during the open, we could have a bounce back from these zones. At the moment, we still have some time before the open. So you're going to watch out for the upper supply now too, and that would be currently in a blue circle. That would mean to look out for possible formation. For the 30-year, same thing. Came down and hit a little bit of this demand area, but then was met by, so this was the blue circle a little bit earlier on because I saw it hovering right above this area, but now you can see we have started to fall. So it did take one pull back into this zone already, and now you can see we have started to continue to fall. And back down again. If you take a look at this, it's not too surprising that we are, if you really say what's going on with the bond market, not a whole lot. The only thing is that the 30-year is a little lower than the 2 and 5 year. But in terms of what it's really done in the last few days, you can see it's really hasn't done a whole lot in direction-wise. So not giving us a huge help in our market direction. Okay, so with CL, very nice move off of the lows. Now you can see we have a 240 zone. We have a 240 zone coming in at 26.74 to 25.66. 240 upper zones, you can see where that's coming in, these two zones on top of each other. Which is a little bit closer to that 46 mark. You are going to fill the gap a little bit before that on the 60-minute. And you can see on the 60-minute, that's going to be coming in first at the 41.85 to 42.75, and then 43.42 to 44.68. Some of you will notice you do have some overnight 5-minute zones that's been hitting, but has slowed down a little bit. But you can see you do have a couple of overnight 5-minute zones that, for those of you that's doing a little bit of that intraday trading, you may be taking them in terms of taking a little bit of profits off of them. One thing I will mention is it does look like there is, so we're all the way up at 31.93, which is showing us a little bit of a gap coming in at 29.11 to 28.24. That gap area, that gap area is coming in. Let me show you on the 30-minute. That gap area is coming in inside of these two levels right here. So right now you can see how much we have rallied since it closed on Friday. And these two levels on the 30-minute is where this gap is approximately at. So you can see right here, the first one starting at 29.43 to 28.98, and the second one is at 28.80 to 28.32. You know, if you remember, this is coming off of our overnights 30-minute zones. It went down and hit the second area, but then you can see since then we have continued to rally all the way up to, so that was down all the way down at the 2570 mark, and now we're all the way up at the 3202. Let's take a little look at gold. Gold has been just showing a little bit of weakness at the current moment, but you can see the general picture of what gold is showing us. If we take a look at this on the day session charts, it looks like it is trying to head back towards right up at this highs here, right? So we don't have a lot of fresh supply areas for gold at the current moment. We are basically going to be retesting. You can see up at this 1766 to 1772. Currently, you have this large demand area sitting right below it at the 1753 to 1741. You can look for some small time frames inside of there if you want to play it back and forth, but this is, it looks like it's getting a little bit tighter between the two sides at the moment with gold. It's still within our overall, if you take a look overall, you can see these highs to the demand. So it's still within a very large overall range if you take a look at it. With nat gas, we've had these two levels on top of each other. It looks like it came in and hit the first area. So right now you do have the opposing little bit of demand right down at the opposing demand, but you can see if it can get through that zone, it can try to come back to, if it can get through there, try to come back to the next area, which would be the 1666. So you can see the first one, yesterday's high around that 1730 mark, and then down at the 1666. The other markets you want to watch out for, so copper's in between these two zones on the 60-minute currently. It's showing good strength along with the stock market. If I want to say anything, so what I mentioned before with the overall, either the semiconductors or the overall the hearing in front of the WHO, if anything's going to affect those markets, it should affect also the Aussie, copper, and all those markets too. So if you do come into some supply zone with those markets, if you can match up these markets with that, because they're all kind of correlated together. So you can see when we have a pretty decent stock market and good going on in Asia, you'll typically have that also in the Aussie and in copper. So right now you can see some demands forming with them as you continue to move up, just like the equity markets. But you can see down below, we do have this 5-minute up at the 23,579 to 23,55. Okay, let's take a little bit look at the dollar. So the dollar is actually not showing us a whole lot at the current moment. What it has done is, so the only tricky part with the smaller time frame areas with the currencies is you can see the dollar pretty much held this area perfectly, but the euro had to test out a little bit. So remember, even though it is inverse, so when it comes to the smaller time frame, what's going to make it difficult is because the euro represents less than 60% of the dollar. So it can move a little bit faster or a little bit slower than the dollar. So it's not going to be a perfect inverse correlation. But it, in terms of the euro, it's stuck between the two levels. With the dollar, you can see it's hanging up at this same area, but not showing us much strength either, as it's still within this area here. Okay, so you want to remain somewhat careful with that, because you can see that we are still having a kind of non-direction, but the dollar can get very quiet as the stock market rallies, right? So the dollar can remain in a bit of a range-bound mode as the stock market continues to rally. You can see the volatility picks up once you have a stock market move in the other direction. But once the market calms down, the dollar calms down. So you can see with the euro, that's what we have had. We have had a move off of our 15-minute demand zone. You can see a little move off of that 15-minute supply zone, and now but then remember too, that's overall coming from this 240 zone. So if I want to say anything, the 240 zones, you can still keep it in play. The 15-minute zones are going to be still inside of this whole big range, so it's not going to be as high quality. And the lower demand zones we've hit 1 or 2 times already. So it is in a very, very tight range. So the euro, I would say, especially if you are trying to do that lower time frame, you want to be a little bit more careful with the euro. The Aussie, remaining strong with the overall stock market, still below our 240 zone. So I would say that would be the one caution with it all, as Sam pointed out. If we're really that strong and the dollar is that weak, shouldn't we be rallying a little bit more? So that's something to still keep in consideration. But as far as right now, not a whole lot going on, except that our higher zone now is going to be up closer to the 68.43. To the 66.65, up to the 68.87. That's where you're going to come into your fresher supply zones, and the fresher demand zones coming in at 62.36, 61.97. Those of you looking for a little bit of day trading, looking at a little 5-minute area, just be careful in terms of what new demands that form with it. But there is a little 5-minute area from the previous session that's coming in at 64.90, 64.99. All right, so for the pounds, not quite down to our 240-minute zone. The only thing I was looking at was we've had a couple of hits off of supplies already. So meaning we've had the 240, then it pulled back once, it pulled back to another area, then it pulled back to another area on top of pulling back to our 15-minute area. So even though we do have, you can take a look at this zone, but I don't think it's as high quality anymore. This has been numerous. The upper zone, you can still keep in mind 123.59, 123.73. This one may be limited, could be for very quick trades, but I believe it's going to be limited in terms of profits on these close supplies at the current moment, given how many supplies we've already moved down on. It did the yen, and I believe the other one was the Swissy. The Swissy, as you can see, same thing. Still in a big range mode. So you can see these are actually, well, they should be brown colored. It'll be more brown next time. But it'll be more brown color because this is inside of these two ranges where we've hit on both sides. As you can see, the gray colors, right? And now we've also hit up into the 15-minute zone as well as we start to rally back up. So again, nothing of great quality inside of there, but just little trades moving back and forth. And the last one is going to be The Kiwi too as well, very much impacted, a little bit weaker than the overall stock market, but will move with the Aussie dollar and the rest of the market. So it does have a little bit of supply coming up a little bit higher at 60.72 to 61.23, but overall within, you can see where the really fresh area is still a little bit further out on the two sides as well. Okay, so that is it for today, and we will continue to make these sessions better for you. And it was great seeing all of you here, and great to have Sam back. So have a great day, everyone.